Good evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out Singapore, and we are a multinational hedge fund, means proprietary hedge fund, which effectively means that no third party can invest capital in our fund. Before I start, I would like to give you one good news, which is our OTT platform, Over the Top TRFX Academy. First booklet is launched. It is live on our website. We are upgrading this booklet, and probably by next week, we would be launching a detailed booklet. And after this booklet, more booklets are on the way. So the first booklet is already launched. We all know what is happening in the market. Today, when I was doing my research on the Google, I got to know that investors lost 18 lakh crores. 18 lakh crores, which is 18 trillion rupees in the last 5 days. And tomorrow is Friday, the last day of the week. Sentiment is more or less the same, that the market would be falling. Now, if we see this in a detailed manner, then basically this is triggered by two things. Number one, the exorbitant rate hike by the Federal Reserve. Federal Reserve hiked by 50 basis points, irrespective of all warnings provided to the Federal Reserve. But they outrightly ignored all warnings and hiked it by 50 basis points. The end result, Dow, Standard & Poor and Nasdaq, all three are losing consecutively. Consecutively, they are losing. Majority of the big hedge funds of the globe, they are losing. Like today, I got to know one hedge fund lost severely due to this crash. And very important thing is that today also Federal Reserve made one statement, which is that they would be hiking in the upcoming times also, which means they would be hiking in the upcoming meetings also. And God forbid, if this would happen, then this would trigger a massive sell-off in the market, which by the way is already happening. We know that the technological companies of US, which include Apple, Amazon, Facebook, Google, Microsoft, Netflix, they all are down. Today, Aramco replaced Apple as the most valuable company of the globe. Reason? Apple's share price is near about $140 versus it was near about $170. And the kind of sentiment we have in the market looks Apple may fall below 140 also, eventually may come down to 120 also if Federal Reserve hiked it again. Today, Reserve Bank of India also released the inflation data. And unfortunately, the media claims that this inflation data is 8-year high. But my question is intact and would continue to be intact, which is India is facing double-digit, rather more than double-digit inflation last several years. So this number is definitely not an exception and should not be termed as an exception. Now, Reserve Bank, there are multiple articles we have in the social media which claims that Reserve Bank might be hiking the rate in the upcoming policy meetings. And if this would happen, then this would trigger another wave of non-performing asset in the Indian banks. Now, how? RBI already hiked it by 50 basis points. They already hiked CRR by they hiked by 40 basis points and CRR by 50 basis points. And if this hike persists, then the funding, which is called credit to deposit ratio, which is made up by the Indian banks, would be in the big trouble, because the fresh non-performing asset would come in the market. And anyways, Indian banks are also facing huge non-performing asset. So this isn't that they are not facing non-performing asset. That is a separate thing that they write it off, and our media is corrupt, so they never highlight this. But you name the bank, whether this is State Bank of India or whether any other bank, they wrote off a huge amount of non-performing asset in the last several years. But God forbid, if RBI would be hiking again, then this would definitely trigger a huge sell-off in the market. I never chase Nifty, whether Nifty is 15,800 as we speak, but if this would happen, then it would have a detrimental impact on the indices. Detrimental impact on the indices, and maybe we will see that the indices will come down substantially. And especially those sectors, those who overpriced, like IT and banking. In India, IT and banking are the overpriced sectors. I always say IT because let's take an example of LTI, Larsen and Toubro Technology, who was once hyped by Indian media, and the stock reached 7,500. Of course, it's a good company. It is a part of L&T as a group. It's a profitable IT company, no doubt about the credentials. But having said that, their balance sheet is not what we have, the balance sheet of HCL, TCS, and all these big IT companies. And this stock reached 7,500. And I was like, oh my God, what kind of business you people are up to that made you to 7,500 rupees? Happiest Mind. Of course, I agree, it's a mid-tier IT company, profitable IT company, earning revenue, no doubt about the credentials, but Indian media sold Happiest Mind at 1,500 rupees. In either case, whether this is LTI or whether this is Happiest Mind, Indian investors bought, assuming the stock will move up, up, up and up. But what happened? The stock is coming down, down, down and down. It is not the selling which is happening, although I am yet to compute the numbers, but according to my estimate, till May, we are speaking like 11th May, around 2 lakh crores, near about 2 lakh crores worth of selling done by FII in India. About 2 lakh crores, which by the way to me is a big number. Probably if not the big number for Indian media. And I doubt if this selling pressure persists for another few weeks from here, then the domestic institutional investors would be able to handle this pressure. I doubt this. They won't be able to handle this pressure. Another important factor is the LIC, Life Insurance Corporation, the most hyped IPO in India after Paytm, we can say. You know that what is happening to Paytm. Paytm is very near to 500 rupees. Very near to 500 rupees. And God forbid if this trend persists for another few weeks, then probably you may see Paytm at 300 rupees also. Zomato is near about 50 rupees. Zomato is cheaper than the tomato. Zomato is a loss-making company. Thoroughly, although Paytm is also a loss-making company. You look at the card trade, you look at the Policy Bazaar, you look at the Nike, all are losing consistently in the market. Now, one thing is very clear, and that is something which we need to learn, is that according to GMP, first of all, I never understood the full form of GMP, although I knew that this is gray market premium. I have made many videos on the gray market, and many more videos I would be making on the gray market eventually. But one thing I never understood is that how people compute the gray market premium. Like, what is the formula? Who compute this? What is the logic? What is the rationale of computing and all these things? That I never understood, to be honest. Now, having said that, before the IPO of LIC, the grey market premium was around 90 rupees, which means the market was expecting LIC to open 90 rupees plus, because their base price is 949. You add 90 rupees, so they would be opening near about 1050 estimate. Now the same grey market premium is saying that LIC would be opening negative. I have read many articles on the Google. Some are claiming minus 50, some claiming minus 80, some claiming minus 100, some claiming even minus 150 also. Now this would, make one point which we highlighted since long, which is that LIC is considered as an overvaluation company. Me and my fund never invested in LIC because we are clear one thing from the very first day is that if we do not find a stock at an intrinsic value, we will never invest in this stock. We are very clear on that thing. And according to us, Life Insurance Corporation is an overvaluation company. Of course, because their market share in 2000 was near about 80%. And now it is near about 60% and still coming down. LIC earns a huge revenue from the sale of equity securities they're doing, because currently they are acting as a domestic institutional investor. And this also raised a big question how long LIC would continue to be a domestic institutional investor. Because once LIC is basically, you can say it's listed, then all the financial information of the LIC would come on Reuters and Bloomberg. Then it would be easy to have majority of the information of the LIC, which currently not the scene today. Lot of question, lot of critics, lot of credibility would come into the picture. It's a matter of days now. Guys, another important thing is that Delhi Very, which is a loss-making company, they already wrote to SEBI that they would continue to be loss-making in near future. Still, they got the approval. Having said that, their IPO is under subscription. It's a loss-making company, and surprising fact is Indian investors are investing in that IPO. They learned nothing from Zomato, Paytm, Nikia, Policy Bazaar, and all these companies. They are still investing. The hard fact is ICICI Prudential Mutual Fund and many mutual funds of India also invested the retail investor money in the Delhi Very IPO. That's a big question, and which hurts me because it puts the retail investor money at risk, because Delhi Very is a loss-making company. To conclude the whole story, I never chase the Nifty number. So whether they are 15,800, they are 15,600 or whatever, I never chase, because I always chase intrinsic value. To me, the king is always the intrinsic value. Anyways, there are many people we have in India who chase the number. But I see that if Federal Reserve would hike one shot again, in their June meeting, and the probability of that is very high to me, because Federal Reserve is also a compromised central bank, and history is a witness that effective 2008, Federal Reserve did so many compromised things, which in fact books were written on that, and I myself study one of the books. So keeping this as a mind, if Reserve Bank of India as a counter retaliate increase the rate on the behest of inflation, although the real reason is they wanted to stop the institutional investors in India, because if the dollar rate would go up, then the institutional investor would go to US, so RBI is forced to hike the rate. Then we may see a substantial correction from here. But let me correct you. Substantial is a very I would say, what do you call in English, it's a debatable word, because the definition of substantial varies from person to person. So that one thing I would like to clear. But if RBI would be hiking the rate from here, God forbid, probably even by 50 bips, like you can assume, then then Indian markets would be in a real trouble, because the ground reality of Indian economy is not as strong as it is being reflected in the media. That's a separate thing, that the media is always reflecting that the ground reality is very good, exports are going up, but the hard reality is that the startups are cutting thousands of jobs. And why are they cutting thousands of jobs? Because there is no business. That is the common fact. That is something which we need to learn. So sentiment is really tough. And this is what we need to learn. And I request investors to be very careful. Do not do any form of idioticity. Rest all is your call. My duty is to warn you. Like on my Facebook, I always warn people on time to time basis. Some listen, some do not listen. That is up to you. This is Rahul Magan from Treasury Consulting Group. You knew my personal number, 9899242978. I repeat, 9899242978. Have a great time.